Just takes about a minute to get started, folks. Don't blame me, blame YouTube. All right, here we go. Just send this over and we'll be starting. There we go. Perfect. Good morning, David. Good morning. Brian, good morning. Good morning, good morning, good morning, everybody. Let me go ahead and switch over my screen so we could do this live. All right, perfect. That's what I wanted to see. We got David, we got Brian, we got Adam, we got Dave, we got Marshall, we got Nina, we got Cam, we got Robert, Flying Ronan is in the house, Timothy, Infinitely, Kirk, Martin, Ed, Haru, Clay, Angel, CJ, Ivano, Roddy's in the house, Carrie's in the house. Welcome, 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 welcome. Good morning. Angie, good morning. I love Robin Williams. You guys know the routine. We'll get 100 people here and we'll be starting. We got about 80 right now. We'll be starting in just a minute. Jacques, Zoe, good morning. Jody, good morning. Hope everybody's good. I got my internet fixed yesterday, but they didn't change my router in this room, so I'm a little bit slow today, but at least my internet is working. And it's in the process of getting fixed. I think you guys could see me and hear me well. If you can't see me or hear me well, let me know. Let me go ahead and plug something real quick here. Let me just put this up here. 1 second, 1 second, 1 second. Bear with me, folks. It's just going to take me another second to get going. 1 second. I just need to post something, and then we'll be starting right now. Here's that. Here's that. All right. Here's that. Whoops. Here's that. Okay. There we go. Now I'm in business. Business. Good morning, David. Good morning. All right. Just FYI, a few things before we get started, a little housekeeping. Please, please, please make sure to check out Cam White. He has a room called Customer Service Live. It happens every day between 10 a.m. and 1 p.m. Eastern time. Please, please don't miss out. That's the first thing I wanted to say. If you don't know where it is, it's in your members area. There's a big red link, red like my shirt, and it's in the members area. Good morning, Sylvain. Yes, I will in 1 second. Please bear with me and I'll post them. Actually, I'll post them for you right now here. So that's the first thing. Yeah, and in case you guys didn't get the earnings link, here's the earnings link, okay? This has all the earnings for this week and all the big implied volatility numbers, okay? Also, I have my VIP room today at noon. Here is the link for that. And then at 1 p.m., here's the link for that. And then at 1 p.m., I'm going to go live again with Jack. We went live yesterday. And Jack Carter is a former market maker. And we're getting together at 1 p.m. Eastern to join. And he's going to give you two defense stocks that Jack says Wall Street is pumping up right now because of global conflict. That's happening today at 1 p.m. after VIP room. And again, here is the link to the VIP room right here. Good morning, Jill. Welcome, welcome, welcome. All right, now with all the links out of the way, let's get into all the juicy stuff. And I've also given you the earnings. Now, today's a pretty big day for earnings. Speaking of earnings, we might as well start there. We got Baba, we got Home Depot, we got SE. What's the big one today? It's going to be Home Depot and Baba. Baba's going to impact on Chinese economy. That's a Chinese stock. That can have a major, major impact on what we see in China. No problem, no problem. And then Home Depot is a major retailer. I don't know if you guys are aware of this, but Home Depot and Lowe's, when they start building these in areas, they do hundreds of thousands of dollars, if not millions of dollars worth of research. So Home Depot is very reflective of retail spending, consumer sentiment. I know you're thinking Home Depot is a pretty boring store, Roger. It is. But I'm telling you, that Home Depot is really, really big for influence. Do you guys know if it's coming out before the opening bell, or actually I could check right here. I could check here. Reports first quarter per share before the open. So it's supposed to come out before the opening bell. Not seeing any indication yet. It's only up about 1.69%, but we'll keep an eye on that and we'll see how it goes. But again, we got Jack in the Box today. We'll see if it moves up or down. We got On Holdings, Baba is the big one, and SEC Limited is also another big one. Good morning, Rochelle. Good morning. Hopefully you got those 3 emails I sent you over the weekend. All right. All right. Yeah, great for the hurricane season, right? All right, let's do a few analysis. As of right now, the market is mixed. Dow's up 31 points. The Nasdaq is down 7 points. This is a completely random market. Why is the market random? Because we're waiting for the PPI report to come out. The PPI is going to be one of the, if not the biggest reports today, followed by Jerome Powell speaking. Now, folks, I want you to know that the only number we're focused on, and I'm going to show you right now, is right here. The only numbers we're focused on is X food and energy. It was at 2.4. We're looking for the number to get weaker. And for year on year, we're only looking at year on year. We're not looking for month on month. Thanks, BlueNet. Didn't have a big impact at all. It seems like it didn't really do much. Obviously, we're looking for these numbers to be weaker. If these numbers are weaker, then it's better for the economy. We don't want these numbers getting stronger. We'll also keep an eye on X-Food, Energy, and Trade Services, but that's not as important as the big ones. These are the big ones. 2.2, I'm hoping the number is below 2.2, and I'm hoping X-Food and Energy, the number is below 2.2. If not, we're going to have a problem, and Powell's going to be telling that kid that the odds of him getting that bike are slimmer, and slimmer. Okay, so you're going to watch these levels. You're going to watch crude oil. Crude oil is a very important report when we have PPI because it is impactful. Notice so far, we've done a pretty good job of hanging around this the 200 and the 100-day moving average. If we continue staying around this area, I think we will start building a base like we've been seeing lately, and we will continue moving higher, not lower. It's going to be very difficult for us to break this level, as I showed you, because there's a ton of value at this area. If you guys want to, 22 minutes they're out. Okay, thank you, Adam. I appreciate it. Yeah, usually they do it at 8:30. Right. Some do it beforehand. So don't have any expectations. Don't have any expectations, Angie. We don't know what's going to happen today. What I wanted to say here is if you guys want me to remind you of something on a different scale on a monthly basis, this reminds me of the Russell 2000. Remember, it was building a foundation. It rallied. It had rallied. Then COVID came, and I said it's going to come right back down to this level. Let me show you what I'm talking about. Sometimes a picture's really worth 1,000 words. Oh, come on. It just doesn't want to cooperate with me today. My internet is still slow. At least it's working. So let me show you what I'm talking about. Right here. You see this? See how I drew this area right here? This is a long-term chart. I want to just show you what I'm talking about. Here, look. Here's a 10-year chart. Why did I think it was going to stop going down right here? And I did. I told you guys about this July 2022, and it did stop going down. Why? Not because I was so freaking smart. It was because we have a lot of value here. We have a lot of value. And typically, when you see value, you have a consolidation. Well, what does that have to do with oil prices? Well, look at oil prices. We huffed and we puffed, and we're back into this level. So what you want to see is, thanks, Richard. Appreciate that. I appreciate that. So you see how we're at a very strong value area. So if you ever want to see, so this is developing value. Okay, this is developing. Value is being developed. Here, value is being exhibited. All right. It's so it typically exhibits value and then it comes back to the area that it was building value. And if Cam is here, he will tell you this is very basic market profile because prices do two things: they consolidate and then they trend. They build value and then they relieve value. They exhibit value. So again, crude oil, this is a very strong area, and I think we may have a bounce in this area. Gold, ooh, it just started raining pretty hard. Look at that. We're still above the 8-day EMA. I think we're going to continue being above the 8-day EMA, but I want to be cautious here because the 50-day EMA is very, very close. And if the US dollar, let's just go to quickly, let's look at the US dollar. The US dollar's just barely up, mostly flat. Let's just take a quick look at it. There it is. So if the US dollar continues building this channel on the way down, we should see some strength from energy stocks and oil. Okay. The key is it going to break this and start coming back up, or is it going to continue developing in this channel? To me, it looks like it's going to continue developing in this channel. Also, look at where all the value is. There's a lot of value at this area right here. Right here. There's not nearly as much value here as there is over here. Price likes to go back to its value. Price deviates from value and then it comes back to value. Price deviates from value and then it either values moves up to price or price moves up to value. All right. So I'm hoping you guys are getting all of this information and are understanding everything that I'm saying to you. I think it's on your end, Joey. I think it's on your end. I'm broadcasting. My speed outward is much faster than my speed inwards right now. But again, if U.S. dollar continues coming here, I should expect energy to at least stay here or start coming up. And I'm expecting the exact same thing from the gold market. As I'll show you right now once again, right here. And here is the moving average that I'm talking about right there. So as long as we stay above the 8-day EMA, we should be okay. We've been having 3 down days. This is today, obviously, but let's keep an eye on the 8-day EMA. If we break the 8-day EMA and if we don't stick to this area, we're going to hit the 50-day. Okay. All right. Let's just quickly look at Home Depot. It's still updating the old price pre-open. We'll see what happens. We'll see how it goes. All right. So you have good gold, US dollar. You have a good aspect of the commodity prices. Let's look at bonds real quick, and then we'll get into the meat and potatoes of everything. Now, the bond market's going to be very instrumental today because we have the PPI report. As I showed you, the bond market has been creating value around this area. Now, believe it or not, I actually like what it's doing here because similarly to what it was doing here, it's now doing that same thing at this price level. As long as we stay above the 8-day EMA, this is going to be deflationary. If you see um, if you see today after the PPI a sharp downward spike, a drop taking us to 89.55, and you may want to write that down, then we are going to come where the market's going to weaken. If you see us come up towards the 50-day moving average, the market's going to get stronger. Keep an eye on these levels. Keep an eye on the 91 level and keep your eye on the 89.50 level. Those are the two levels you want to pay attention to. And I could assure you we're going to see volatility one way or the other. Yeah, thanks, Adam. Appreciate that. Yeah, I could pull that up here. I just don't want to overload my computer, but I could pull that up on my trading view as well here. I mean, TC 2000. Here, let me just pull it up real quick. That way you guys could see what I look at the office. Let's see. There we go. It's giving me my alert on Apple. Thanks for that, Brian, yesterday. Brian emailed me, said Apple passed our level, which is true. Um, there's that alert sound. Home Depot. Let's look at Home Depot. Here we go. Home Depot. Home Depot's down about $5 right now, down 1.58%, out down $5. This is real time. Yeah. Okay. No, I think you're looking, Richard. I think you're looking at older data. This is real time data right now on Home Depot. It's right now. Yeah, it's right now at 340.96. 340.96. All right, let's now move on. All right, let me take care of that. Let's move on. All right, so as far as the broad market, let's talk about the broad market. We talked about the bond market. I explained to you what will happen. I like how we're building a base here, but I believe we're going to move. And I think we're going to move pretty good either today and tomorrow, because aside from this data, we also have the CPI report, and that's coming out tomorrow at 8:30, and that's going to be even a bigger report than what we're seeing now. Thank you. I appreciate it, beloved. Thank you. Thank you. Thank you. Thank you. And we have the CPI report tomorrow. And what we're looking at tomorrow is, whoops, what we're looking at tomorrow is right here. It's the only thing I'm looking at. I'm looking at the CPI report, and I'm looking for this number to be below 3.8. And I'm looking at as the whole number to be below as well. Not as impactful as this number, but this is the key number tomorrow, 3.6. All right. And today, we want the ex food and energy to be 2.3 or lower, and we want the annual to be, it's expected to be higher, which doesn't say much for deflation, but I'm hoping that this number is 2.2 and not much higher than 2.2. Look at the consensus, 2.2 to 2.2. If it's above 2.2, Powell's going to have a lot of explaining to do. Keep your eye on volatility today. As you could see here, volatility is already rising. What was really interesting yesterday was the market was fairly bullish, but volatility was already rising. If the volatility continues moving higher, you want to keep an eye on this level right here, especially going into today because of the report. Whoops. And I'll be updating these levels throughout the day in the Telegram channel. I hope you guys view that channel, both the PIT and the free Telegram channel. Keep your eye on volatility. If you look at volatility today, I just can't catch a break. Here we go. Look, it's been moving higher. This is overnight, gapped up, all overnight data. Hey, Rochelle, you have sound. Mazel tov. Congratulations. Maybe you could send me some more emails about your political opinions. So again, higher up here, be careful. Be careful. This is not good for volatility. This is not good for volatility. This is not good for the market. All right. Not good for the market at all. See that? We closed near the bottom and look, boom, and then boom. This is yesterday's session heading into PPI, and this is this morning right here. So something is telling us that that things are not as kosher in the stock land, because you would think, right? Look, S&P's flat. Everything is flat. There's no reason for volatility to be higher. But meanwhile, volatility is going higher. That's not a good look for the market. Speaking of the market, let's get into the nitty-gritty, shall we? And look, after I started making a copy, it has not changed one time. Murphy's Law, it never fails. And as soon as, watch, next week I'll just do it. I won't do it one time and it won't update. Murphy's Law just never fails when it comes to me. So we talked about gold, we talked about US dollar, we talked about volatility. Let's now jump into the bigger picture. Now, this should have been very helpful yesterday, because it really would have been a great guide to show you where we are in the big scheme of things. So what happened yesterday? Well, we gapped up. We couldn't go above the 523 level. We gapped up. What did we do when we hit this level? We came right back down. We couldn't even go above that level. So you know what I'm going to do? I'm going to put this a little lower, because we tried breaking it twice and we couldn't. So I'm going to put it right here because if it breaks this level, it's going to be significant. Yeah, but it's a little too much. Then you would think the futures would be a little down in anticipation of the PPI, right? Practicing. It works both ways. No, it's the speculation. It's just speculation that's feeding volatility. That's all it is. Speculation. Hardcore speculation. Okay. So we tried breaking twice. We tried breaking the 522.80 level. We couldn't do it, right? We just couldn't do it. Good morning, Sandy. Hope you're well. So we're now in between. We're now in between. The question now is the PPI going to cause us to go above 522.81 or is the PPI going to cause us to fall below 519.90? That's the $1 million or the $1 trillion question, right? Because we're right now right in between these two levels and we need to have some degree. Now, you guys know how I feel about trajectories. If we break one level, we tend to traject that level all the way across. So if we break the 519 something level, we're probably going to go to 570. If we don't go down to the 519 level, we're probably going to test 522.59. And if we do, I hope we break it, because if we do, let me show you what's above that. We got a pile of gold at the end of that right here. That's all-time high right here. I'll put a little trend line right here. Right there. So try to make that cleaner. So again, you could see exactly where we're at right now in terms of the big picture. And if you see us moving down here, don't go long till you see us break above once again. This should give you a really good, hey, Sween, good morning from Singapore to you as well. So again, be mindful of these levels heading into the PPI. How about QQQ? Same thing, QQQ. Look, we hit this level once, we hit this level twice, almost, and now we're right in between, and we're just kind of sitting around. Well, guess what? If it applies to the S&P, it applies to the NASDAQ. You've got 444.33, and you've got 440.88. Upside, downside, okay? Nice and simple. Really, really clean and really, really simple. The Dow, let's look at the Dow. And yeah, we do update them. We do adjust them sometimes, but those levels are pretty much the same. All right, the Dow. Look at the Dow. Look what's interesting. We're right at the bottom of this level here. And to the upside, we've got a level right here. Let me just draw this, extend this all the way here. We got another level right there before we get to the high. So on the Dow, we're at the bottom here, and the two levels we're really concerned about, and we closed at the bottom yesterday, which is not great. And overnight, we didn't really get it up. 39,400, 39,800. Those are the two magic levels. No, Cam, CPI has a bigger impact on the market. The problem is we got the Fed speaker today. So the PPI and Powell may have as much impact as the CPI. Generally speaking, CPI has a much higher impact. So to give you an example, if I was to do a spread, a strangle, I would do a strangle tonight, not last night. And I would do a strangle on the Russell 2000. Roger, why would you do it on the Russell 2000? Well, let me ask you a question. What sector do you think interest rates impact the most? Large companies that have plenty of cash or smaller companies that have zero cash? Smaller companies. Also, earnings are behind us on the large caps. They're just getting started on the smaller caps. Okay? I just gave you a good freebie right now. At least I gave Cam a freebie right now. Cam, you know what I'm saying. You know where I'm going with that. And I'll talk about more of that if I decide to do that, I'll talk about that in the Telegram channel. But again, I wanted to give you, it'll move the most, but I wanted to give you levels so you guys are aware. So let me just kind of go through them again real quick. Real quick. For the SPY, the levels to the upside, it's 522.81. And to the down, it's 519.74. On the QQQ, the levels we want to see are 444.21, 440.76. Don't like go down to like a tick. I mean, I'm rough balling it. I am. I'm not being specific. And on the Dow, I mean, I could be off by 0.10 cents or whatnot. On the Dow, notice we couldn't even break above this level here. And we went all the way to down. We're at 394 to the downside and 397 or 39,775 to the upside or 39,400 to the downside. Keep an eye on this level, and we'll see what happens today, especially after that darn PPI report comes out. Rising slightly in a mild rejection of data. All right, fair enough. All right, so you guys have the ideas here. Now let's look at the sectors real quick. Let's look at sectors. Let's see what's going on here. Let's look at short-term sectors. Come on. There we go. Slight delay, not a big delay. So what's leading right now? Well, we got utilities, you got retail, okay, fairly defensive. You got real estate, okay, you got consumer staples, basic materials, the Dow, okay, I could work with that. You got healthcare, financial, industrial. Hey, guess what? These are all blue chips. Last I checked, all of these are blue chips, and the Dow is behind them. All right, then you got healthcare, financial, industrial, S&P. I could work with that. Moving in a very gradual direction. Notice we're moving from the most defensive to the most speculative. Let's see if we can keep this going. This is impressive. All right, mid caps. I can work with mid caps. That's slightly speculative. Then you got technology. Then you got QQQ. Then you got communication. Man, if we could just throw energy out of here and just continue. You got semiconductors, you got Russell, you got Bitcoin. You know, honestly, truthfully, if I can move home builders and energy out of here, I've almost got almost a perfect balance. The market is not out of balance. And by the way, what has the market been doing the last couple of days? Consolidating. What happens when markets build value? They come into balance. They build value. They come into balanced area. Like I showed you with the US dollar, they build balance. This is when the sectors become balanced, and this is when they become out of balance. So when they're moving fast, they get out of balance. When they calm down and start developing value, they start coming back into balance, right? Because people who are developing value, they're obviously going to put communication next to tech, right? Not because they're everything is coming back to ground. It's coming grounded. It's becoming balanced. So truthfully, I mean, I can nitpick, but the truth of the matter is, even I can forgive mid caps and Russell because they're in the bottom end, not in the upper end. But look at this. These are all blue chips. This is all blue chips. The Dow, blue chips. Technology's down here. Blue chips are up here. They're not that out of whack. What does that mean? That means the market can actually move because it's not that out of balance. You're not seeing communication services here and tech here. Where's tech? Let's see. Where's tech? Tech is right next to communication services and right next. Look at that. Tech, QQQ, communication services. If you move energy here, you got semiconductors, small caps, Bitcoin. Just move home builders and energy, put them up here, and you're good to go. Right? I mean, consumer discretionary is supposed to be here. It is here. Russell is here. Even mid caps are below the S&P 500. That's fair. So we're not that out of balance right now, especially in comparison to how we were. Let's take a week ago. Let me show you. Look at this. Communication services is next to utilities, next to the Russell 2000, which is next to technology, which is next to QQQ, which is next to retail, and the Dow Jones is right next to the S&P 500. You got energy and material next to consumer. I mean, this is a salad. This is a salad bowl right here. We did, David. I'll show you tonight. We did. We numbered it. We numbered it. So you could see very, very clearly. You could see very, very clearly. Let me just go back here. You could see very, very clearly that things are a lot more balanced than they were 6 days ago. A lot more balanced than they were. Again, a lot more balanced. A lot more balanced. That's good. That's good for the market. Let's look at the PPI report. Just came out. Let's look at the bond market, actually. Oh, look at the bond market. Not good. We want a cold report, not a hot report. Let's see what the number is. Well, we're expecting 2.3 and 2.2. Let's see what it is. Roger, why didn't you go long yesterday? Why didn't you take action yesterday? Because of the PPI report. 2.2, that's not bad. That's not bad. That's not too bad. What about the core? I want to see what the core number is. Yeah, that doesn't mean anything. I want to see what this number is. I want to see if this number is 2.3 or if this number is 2.4. Oh, yeah. Well, of course it's dumping. Interest rates impacted by it. Well, this is why I love being here at this time. Look at the Dow right here at this level, right there. It's not going down. It's just kind of sitting there right at that level. This is what I want to know. I want to know what this report came out. Core 2.4. Ay, ay, ay. Kid, you ain't getting that damn bike. That's bad. We came at the upper end of the range right here, ex food energy. So here's my question to you. How is Powell? So here, this is the trillion-dollar question. How is Powell going to look you in the face today at 10 a.m. when he's talking and telling you that they're making progress when without food and energy, the number is exactly where it was a year ago? Yeah. Thank you. I got it. I got it all. Oh, we're making progress. We're making progress. Your daddy's making exactly as much money as he was making last year. He was a loser last year, and he's still a loser now. It's not bad or good. It's not good for it's telling us that the kid ain't getting that bike. Bye-bye, kid, and getting that bike. Bond market, it's not a horrible report. Let's not get excited, but it's not a great report. It's not a great report at all. At all. This is telling us if it's a 2.4, and I believe what you guys are saying it is, what is Powell going to say? We're making strides? Well, Mr. Powell, your producers' prices are the same as they were a year ago. Yes, but you're not counting food and energy. Well, Mr. Powell, without food and energy, your numbers are exactly where they were a year ago too. 2.4, 2.4. Remember I said it's going to be better if it's below 2.4? We got to show some progress. We've got nowhere. We've gotten nowhere. We've gotten nowhere. This going down is not good for the market. But remember, we have the CPI. Do you understand why I didn't want to take any trades in the pit yesterday? Because I didn't want to be a sitting duck this morning. When is the last time? It's been great. He will wrap a lie in hope. I don't know what he's going to say, but I can't wait to listen to it. I'm going to tell Matt to turn it on right now. I'm going to head out there when we're done here. So the report was bad. The report was bad. The report was not good. The report is telling us we're not making progress. The report is telling us the kid ain't the father's not making much progress in his salary. Dave says nowhere but up. Damn right. Safety first. Why lose money? Exactly. Let's look at the QQQ real quick, right? Give me a second. I want to just kind of look and see what's happening. We just bounced off of that level. Nothing happened, basically. Nothing happened. It'll all happen when Powell speaks at 10 o'clock. But we're basically just kind of flat. All right. So let's talk about the bigger picture. Might as well use this since it's still updated, right? So crucial PPI report is coming out today. We already had it. We already know what's going to happen. Intel rose more than 2%, offset by Applied Material. Keep your eye on chip stocks today. They're going to get volatile. It's quite interesting reading this after the fact, right? Yeah, Hayden, no bike for that kid. Poor kid. I feel for him. I feel like donating my silver streak that was stolen in 1981. Phillips stated Monday that it's appropriate to keep interest rates at their current level until there's further evidence that inflation will return to 2%, not 2.4%, 2%. Characterized Fed policy as restrictive, expressed concerns about the lack of progress in inflation. I agreed. In light of the attenuation in progress in terms of getting inflation down, it's appropriate that we maintain the policy rate in restrictive territory, which it is right now. Agreed. I highlighted this for you. Look at this. The kid, with all of this crap, look how dense this kid is. He still thinks there's a 27% chance that the Fed is going to lower rates in July. Now, do you think that's possible? Of course not. And by the way, those odds just went down with the bond yield going down. And I'm sure on the 2-year, it's gone down quite a bit. Let's take a quick look and find out because we're nosy beasts, right? Let's look at the 2-year. The 2-year has the most sensitivity, by the way, to these reports. Just so you know, if you just want to see sensitivity, the 2-year, because it has the least amount of note time, right? It's a lot more foreseeable to know what happens in 2 years than 10 years or 30 years. So the lower the time period, the more volatile they will be. So they haven't really moved at all. So no real major impact from this report. And same thing with 10-year. Let me look at 10 years. Again, it's important for you guys to see what I look at during these reports, which is one of the reasons why I do this session this early in the morning, so we can be together for when the Fed comes out with data. Don't you like being here with me so we can interpret the data together? It's nice, right? Nah, not much of an impact. We're going to have to wait for Powell to speak. Not much. The kid is getting his opinion from the fund traders who are all less than 30 years old and have never heard of a thing such as a bear market before. But you guys, look, let me show you guys. You want to see something nasty? Look how nasty this is. X food, energy, and trade services, it's gone up. So Powell can't, when he comes out today, he can't blame food and energy. He has nothing to blame. You see this? This is what I was looking at. When you take away trade services, food and energy, this is like the core of the core. It's gotten higher. So this is bad. Not only is it not making progress, it's gotten worse. Look, X food, energy, and trade services, 2.8. We just came in at 3.1. That's a recession time, folks. All right. So let me now go back and fill you in on everywhere. So this is bad. This number is going to go down probably to about 20%. Bonds will go down, and this will put pressure on the stock market. Obviously, we will have to see today, but I'm not loving what I'm seeing today. I really want the market to rally into the end of the day, and I don't see how with Powell putting on cold water onto the kid. On the earnings front, we got Home Depot, core PPI, 2.4 is what it came in at, which is what they were expecting pretty much. But this was not expected, 3.1. And watch, nobody's going to talk about this. No, let's not talk about crashing or anything like that. So again, just be careful. Be careful. We still have CPI tomorrow. We have the big report tomorrow. And it looks like we bounced off of this level and we're right back where we started. So the market is not impacted at all as of right now. Powell hasn't started speaking yet. Europe is down 0.12. Everybody's waiting for Powell. Travel and leisure stocks underperformed. Auto and energy stocks advanced. Usually auto and energy are correlated, so that went pretty well. China closed slightly lower as investors cautioned ahead of China's big tech earnings and release of the latest U.S. inflation data. The tech earnings they're talking about are right here, BABA, and also C Limited, that's China. And I think there's one more Chinese stock that's coming out. But the big ones are BABA and C Limited. That's coming out today. Okay. Okay. Japan closed higher today. Energy, consumer, cyclicals, technology stocks outperformed. Data released by Bank of Japan on Tuesday revealed that producers' price in Japan remained steady year over year. Not in the U.S., it hasn't. He speaks, yeah, he does, but I like to watch the cable channels. There's some cable channels where he speaks. I'll give you the name of that network. I have it. I have Time Warner, but there's a public service channel where he Zoe, I think that they're going to keep it steady instead of increasing. They're just going to keep it steady for a longer period of time. We also have New Holdings and New Holdings is a metal company. Keep your eye because metal could be impacted by producers' price index. Okay, now that we're done with this on all the levels, let's now talk about momentum and stocks. So 90-day highs, 90-day lows. Not a lot. Look, the number of stocks making 90-day highs actually went down from look, let me go back in time one day. Oops. 249, see that? And then the day before that, it was 305, and now it's only 180. So the market's becoming a lot more complacent. All right. Are a lot more complacent. Yeah, you could find it on YouTube. Just watch Conference with Fed on YouTube. That's what we do on our TV that I have at work, and we just watch it to the right of us the whole time. So my point is momentum levels are not crazy. There's only 180 stocks making 90-day highs, and there's about 20 stocks making 90-day lows. There's really nothing crazy. The market is just becoming more it's becoming more choppier and building value. It's not becoming very volatile right now. From those stocks, let me give you the stocks that I like. Look at the bond market now, coming down. 10-year note coming down. Let's look at the futures right now. Futures are down quite a bit. Nasdaq is down 75. The Dow's down 45. All right. Before we get deep into this, I wanted to talk about Apple real quick. Thanks, Brian. I appreciate it. Let's see if we can get by Friday for it to be above 20. 20s are break even. Again, that was just a paper trade that I wanted to show you how time spreads work. They don't always work out, but when they do, boy, oh boy. So the market is being pulled down by this. A few things I wanted to talk about. Oh, come on, Apple. I'm sorry if my computer's a little slower than usual. You guys shouldn't really feel it too much today, if any. All right, Apple. Apple had what I like to believe here is a breakaway gap. That means that it's building a base here and it's going to go higher. I'm not concerned with Apple going higher because if it goes higher, it's going to pick up a lot of momentum. What I'd like to see is I'd like Apple to close near the highs today. And what I may do is either take a long position or do a spread here for weekly cash flow. And I'll let you know what I decide to do later today, but I may do one of those two. But I'm starting to like Apple, okay? I'm genuinely starting to like Apple. And I like how Apple kicked this is the 200-day moving average. Notice it bounced right above the 200-day moving average, kissed the 200-day moving average, and is now coming back up here. And I did predict that was going to happen. I didn't think Apple was going to fill the gap and come back down. I thought that buyback was really, really impactful. Okay. Now let's go through our stocks and we'll call it a day, shall we? Or call it a morning at least. Hey, folks, are you getting value out of this? Am I putting you to sleep or you're getting some value out of this? I hope you're getting some value out of this. First stock, UAL. I like UAL a lot. I like Toast. I like Qualcomm still. Qualcomm is actually my number one chip stock right now, not NVIDIA, Qualcomm. Right now. Moderna is on back. A lot of hedge funds love Moderna. Unlike Tesla, they don't come out with nonsense. Good. Hey, 370 in the room. Yeah. Good. Infinite value. Good. I love that. This stock looks really good right here. Awesome. Good. And don't forget, folks, customer service live with Cam between 10 and 1 p.m. Deep finger value. Okay. This stock, I like this stock. I'm going to be looking at it today. Similar to what I like about Apple, a breakaway gap and continuation. Doesn't fall apart, doesn't make lower lows, continues picking up momentum. That's a post earnings play. This is great morning show. Perfect, perfect. Love it. Let's continue. Copex. This is a copper miners ETF, which means if we're looking at this, we might want to start looking at copper stocks, individual copper stocks and steel stocks. And by the way, folks, when tech and all those stocks go down, the Dow, blue chips, and metals tend to lead. So this is a very defensive sector, and the options on this should be okay. I still like this stock. Been talking about the stock for months. Literally been talking about the stock for months. Still like it. Also, look, gapped up and defended the gap. Joke. It's a GME joke, Steve. um, Aspen. Also gapped up, defending the gap. We already talked about Apple. That was the next one on my list. And PDD, another one. This one's starting to come back nicely. Nicely. I wouldn't worry too much about this one random bar here. I would just pretend this bar never happened and just focus on this. Again, hit the 100-day moving average, kissed it, and then has been back up. I'd like to see us break above the high here. Okay. That's the long list. I'm just going to check Home Depot real quick. Yeah, it's still pretty much at 342, just up a little bit. The stock is not in play till it breaks below the 200-day or till it breaks above the 100-day. Short list, Shopify. INSP. And you can't say it's the first time we've talked about Shopify. It's not. Be careful here. Be careful. It's almost at the 200-day line. Be careful. I didn't see that when I gave it to you. So I prefer we wait on this one. Wow. That's a beauty right there. That is a beautiful, beautiful stock right there. Beautiful, beautiful stock right there. 1 second. Let me just. Well, we just broke our record. 375 people in the room. Nice. Nice. Very, very nice. Let me just move this here. Very, very nice. 376 now. Let's continue this exercise. EVH. Got to get to 400. EVH looks good. BMRN. And remember, we also have about 1,000 people watch it after the market, after we're done here live. So I still like Schwab. Tesla I talked about yesterday, JJ. I'll talk about Tesla more in my you know what? I'll have a minute. I'll talk about it in a second. Hold on. Let me just finish this and I'll talk about Tesla. This stock is new on our list. RPD, CCOI. Ooh, these are nasty, nasty stocks. And last one. Ugh, what a dog. Tesla. Let's talk about Tesla. Tesla looks like it hit the 100-day moving average, and now it looks like it wants to slide back down here. Um, Tesla hasn't been doing anything. It's completely random. But Roger, it's been moving 5-6 points a day. Yeah, that's what it usually moves. And remember, I wrote you a Telegram alert yesterday. JJ, you asked me about Tesla. I wrote a Telegram alert about it yesterday. I wrote that if you have a stock that fluctuates 5 points a day and you see the stock up 5 points, it means it's still random. This is complete random activity. This is nothing. This is bounced up, couldn't defend itself, and now it's coming down. These are all shorts, Martin. Schwab. I like Schwab. Thought I put on a trade for Schwab. Yeah, Schwab looks like it's just having its little, kind of a what it always does, and then it looks like it wants to come back up again. Yesterday you said not to go short because it's against the trend. Peter, can you be a little, what was I talking about? What was I talking about, Peter? Yesterday you said not to go short because it's against the trend. Go short what? You got to expand on that. I talk about 100 assets every single day. Yeah. So I don't know what you're talking about. Yeah. Yeah. I want to know what we're talking about. Okay. So this is a long stock right here. This wasn't a long stock. Tesla was a short stock. Yeah, Peter, please specify because you're confusing me and everybody else. Yesterday you said not to go short because it's against the trend. What was I talking about? The index, the sector, the bonds, volatility, gold, US dollar. What are we talking about? The trend was, what trend was bullish? Are you talking about the overall market yesterday? Yeah, I didn't want to go short yesterday. Yeah. No. I'm still very cautious about going short. I'm very cautious right now. Look, Peter, you've got 20 stocks right now. Yeah, I didn't want to go short yesterday because of report today. I didn't know what was going to happen. Look, you got 20 stocks making 90-day breakouts. There's not much there. Yeah, there's just not much there. There's not much to the downside. But if I do go short, it'll be the stocks that I said to go short. But yesterday I didn't want to go short. No. Today may be a different story. Yeah. I mean, we're very what happened yesterday was a long time ago. I talked about gold. Right here. Gold's not doing anything. I said gold, I'm bullish gold as long as the US dollar continues breaking down. It's down right now. And as long as it stays above the 8-day EMA, and I said the same thing about energies. Yeah. So again, yeah, I didn't want to go short yesterday. Yeah. And also yesterday was choppy. Yeah. So yeah, what I did yesterday was yesterday. What I'm doing today is today. Yesterday and today have no, and I didn't go short yesterday. Peter, you're right. And I didn't go short yesterday. All right, guys. It was a great session. Please, uh, please, don't miss out the VIP room and don't miss out Jack's class. There's the link to Jack's class. It's happening at 1:00. We're going to give you 2 defensive stocks. And my VIP room is at noon, where I'll tell you exactly what I'm doing, why I'm doing it, and why I'm not doing it. The difference between yesterday and today is like the difference. It's like a year for trading. It's a big difference. I'm still not going short or long, and I don't even know which way I'm going to go, Peter, before 10 a.m. We got big things coming up today. Are we going to break these levels to the upside or to the downside? Very, very important. We need to know, are we going to break these levels to the upside, and are we going to break these levels to the downside? Is the market going to completely recover like it's doing right now and bounce back up and defend this level? What is Powell going to say at 10 a.m.? There's about 30 or 40 factors that are going to help me decide if I'm going to go long or short today. And that's what I've been talking to you guys about right now. Whether I'm going long or short is a conclusion. I don't know if you guys ever been to grad school, but you get the least amount of points for your conclusion. You get your points for your analysis. That's where the money is, your analysis. What I just did was spend about 53 minutes with you going through my analysis so we can determine where we should go long and where we should go short, when we should go long and when we should go short, and how we should approach our longs and how we should approach our shorts. If you're only interested in the conclusion, then you don't need to be here because it's not going to help you. This is to teach you, not to give you picks. You need to join my services and pay up the good money to join the picks. All right. I'll talk to you guys later. Have a great day. Love you all and have a fantastic Tuesday. And keep an eye on those for Squirrely Powell, because boy, oh boy, he's going to be trying to sell you a bag of goods. Bye, guys.